Welcome back to the deep dive. Today, we are strapping in for a highly specialized methodical journey.
We really are.
We are performing what I'd call an intense audit of the naval supply system, specifically focusing on the formalized, often very rigid world of material expenditures and accountability.
Right. And this isn't an abstract finance we're talking about.
Not all.
Where?
This is about tracking every single dollar, every item, and the precise documentation that validates the entire transaction.
That's right. And our mission today is explicitly tailored for you, the listener. Whether you are preparing for a critical certification exam, maybe you're writing a detailed policy memo on logistics efficiency, or even building a coaching plan for your supply teams.
We're basically going to act as a focused professor today.
Exactly. A detail-oriented professor prioritizing definitions, the critical numbers, and the precise cause and effect relationships that really underpin the entire material flow within the Navy.
The goal here is to build this knowledge structure so it's tight, it's accurate, and it's ready for instant recall when you need it.
So, with that, where should we start?
Okay, let's unpack this core concept first because it is far broader than just, spending money. We are dealing with the term expenditure. What is the Navy's formal definition of this, and why is it so much more comprehensive than just the word issue?
It's an excellent place to start because the word itself is deceptively simple.
Right.
In naval logistics, an expenditure is defined as any act that results in a decrease of Navy assets. And that can be material or funds from the activity stock records.
Tells you decrease.
Any decrease.
Okay.
And crucially, as you noted, this isn't only the physical issuing of material to an end user, like, say, handing a replacement circuit board to the maintenance shop.
It's more than that.
It also formally covers things like disposal, the transfer of material to a completely different activity, and even material that just becomes unusable.
Like expired shelf life items.
Exactly. Shelf life expiration or something that gets damaged in storage. The bottom line is, if the inventory record for that asset decreases for any reason, an expenditure procedure has to be executed.
That immediately highlights the systemic focus here. We're not just tracking consumption.
Yeah.
We're tracking accountability for loss, for damage, for movement, everything.
It's a complete life cycle view.
So our objective today is to map that entire life cycle, from the initial issue request through all the specialized procedures to the eventual reverse flow of material and the formal accounting for any loss. Okay, so if the definition of expenditure is a decrease in assets, then the entire system has to be built around how those decreases are formally recorded.
It has to be.
What are the four fundamental methods for processing an expenditure?
Okay, so think of these as the four pillars used to decrease assets on the record books.
That-
The first, and by far the most common, is the issue.
The one everyone thinks of.
Right. This is the physical turnover of material to the final end user, the maintenance activity, or the crew member. It's the direct consumption of the asset.
And here's a point that is absolutely crucial for any of you writing policy or planning finances. The financial impact hinges entirely on the type of material being issued.
Oh, absolutely.
We have Navy stock account, or NSA material, and appropriation purchase account, APA material. How do these differ financially when they're issued?
This distinction is absolutely central to command finance. When you issue Navy stock account NSA material, that material is what we call stock funded.
Meaning it was bought with money meant for general inventory.
Precisely. So issuing it directly affects the customer's operating target, or OPTAR.
Their operational budget.
It's their checking account, essentially. The value of that NSA item you issue reduces their available funds. It's a chargeable transaction.
So, to put it simply, NSA issues hit the budget. The command has less money available for other things.
Exactly. It's a direct financial transaction. Now, in contrast, when you issue appropriation purchase account, APA material, which is often non-stock funded, it results in statistical data only.
Statistical data only.
It is still an expenditure, the item is gone, but it does not affect the customer's OPTAR.
So where was the financial hit taken?
The financial burden was typically taken when the material was initially purchased for a specific program, not when it was consumed by the end user.
Wait, I need to pause on that because that sounds like a massive potential pitfall for financial planning.
It can be.
If a command is only looking at their OPTAR log, they might completely overlook significant usage of APA material. What's the real-world consequence of misclassifying that or just not reporting it properly?
The consequence is a seriously undermined readiness assessment.
How so?
If a command uses massive amounts of APA material without documenting it, their financial reports, their OPTAR might look healthy, but their actual consumption rates, which are tracked statistically, are going through the roof.
So they think they have money, but they're burning through physical assets.
That's it. For you policymakers, understanding that APA usage, while it's non-chargeable to the local OPTAR, still represents a drain on the physical assets of the Navy is paramount.
So one hits your local budget, the other hits the Navy's broader asset pool.
Perfect summary. NSA hits your local budget, APA hits the broader asset pool, but that consumption still has to be tracked through the 3M system.
Excellent clarification. That financial distinction, NSA is chargeable, APA is data, is your key takeaway there. Now, moving past issue, what are the other three official expenditure methods?
The second is transfer. This is fundamentally a shifting responsibility.
Not consumption.
Right. It's the movement of material from the custody and records of one supply activity to another.
Like from one ship to another.
A common example is transferring ready for issue, or RFI, material to other supply officers, OSOs, maybe on a different ship, or even transferring excess stock to a shore activity. And the financial value, the extended money value, or EMV, is a key part of documenting those RFI material transfers.
So issue is consumption by a user, transfer is redistribution to another supply custodian.
You've got it. The third method is survey.
This sounds serious.
It is. This is the formalized procedure that's required for expending material that's been lost, damaged, or has become unserviceable for some reason other than normal use.
So you can't just delete it from the inventory.
Absolutely not. You need an approved survey series number, and you have to go through the rigorous process we'll discuss later, which uses the DD Form 200 to ensure there wasn't any negligence and to formally adjust the inventory record.
And the fourth and final one.
The fourth is the less common cash sale, which we should acknowledge. It primarily handles specific authorized retail-type transactions, but, it isn't a primary driver of internal logistics expenditure.
So for our purposes, it's really the big three.
Exactly. For daily internal logistics, your core focus areas are issue, transfer, and survey.
Okay, so once we've defined the action, we need to track it. The Navy relies on some pretty complex documentation systems. Let's talk about the Maintenance Data System, or MDS, which is the foundational element of the broader 3M system. That's material, maintenance, and management.
The 3M system is really the nervous system of Navy readiness. The MDS component is what tracks the labor hours, and critically for our conversation, the material used in equipment maintenance.
So every time a part is issued.
Every single time. The documentation needs to capture MDS information, like the job control number, the JCN, the work unit code, which links that expenditure directly to a specific repair action.
Why does that link matter so much? What's the bigger picture?
Because that recorded information is used way up the chain by TICOMs and acquisition commands to forecast future maintenance requirements, to evaluate equipment performance, and to calculate things like mean time between failures, or MTBF.
So if the material expenditure data is inaccurate,
then the entire readiness forecast for the fleet is skewed. It's the system that links the movement of a single washer to the future design of an aircraft carrier. It's that critical.
that's the so what for you policy writers. The MDS links logistics expenditure directly to long-term acquisition strategy. Now, the absolute stein of tracking anything is its unique identifier.
The document number.
Let's talk about the expenditure document numbering system, which follows MILSTRIP standards.
MILSTRIP, that's the Military Standard Requisitioning and Issue Procedures, is the common language for this. Every document number is a globally unique identifier that consists of 4 required elements, and they're always cited in this order.
Okay, what are they?
First, the designator code. Second, the ship's unit identification code, or UIC. Third, a 4-digit Julian date. And fourth, a 4-digit serial number.
That serial number seems simple, but it carries a huge constraint with it, doesn't it?
It does. Document numbers are absolutely essential for preventing duplication. You cannot use the same number twice. They have to run consecutively within blocks that are allocated for each type of expenditure.
So issues get their own block of numbers, transfers get another.
Exactly. Issues, transfers, surveys all have their own sequential blocks. But the critical cause and effect exception here is for mandatory turn-in repairable items, MTRs.
Those high-value items.
Right. They get their own unique numbering sequence, completely separate from the general issue block.
Why the separate sequence for MTRs? Why the special treatment?
It's all about ensuring they are tracked back into the repair list without fail.
Ah, Closing the loop.
MTR items are inherently valuable, and giving them a distinct numbering sequence makes it so much easier to audit and confirm that the old, broken item was in fact returned, rather than being, inadvertently lost in the flow of general consumable expenditure documents.
Okay, let me quickly summarize that foundational section before we move on. This is a good checkpoint.
Good idea.
We defined expenditure as any decrease in assets. We learned the 4 types: issue, transfer survey, and cash sale. We also hit the critical financial distinction that NSA issues hit your OPTAR, they're chargeable, while APA issues are purely statistical.
Right.
This activity is tracked using the MDS3M system to forecast readiness, and every single transaction is uniquely identified by a sequential MILSTRIP document number, with those important MTR items having their own distinct sequence.
That's the logistics foundation laid right there.
All right, let's transition now into the actual process of issuing material. We'll start with land-based operations, or issues ashore. This is typically the most controlled environment.
It is, yeah. You have more stability, better systems, usually.
And that control starts with authorization. Departments must formally authorize specific personnel to both issue and receive material.
That's a critical internal control measure.
Right, and that could be a list of authorized signatures, or maybe a financial control system like the Government Commercial Purchase Card, the GCPC, for decentralized acquisition.
But either way, someone has to be designated as financially accountable.
And ashore, especially at a naval air station, a NAS, or then the Naval Aviation Maintenance Program, the NMP, the internal procedures, still strictly use that MILSTRIP framework we just talked about.
They do. The choice of how they process the requests often depends on the material's final destination.
How so?
Well, supply departments ashore generally follow what's called the pre-posting method.
Pre-posting.
This is used primarily for issuing material that's going directly to a weapons system. It means that the records are updated almost immediately before the physical issue even happens.
And the alternative to that would be the post-posting method.
Correct. Post-posting is typically reserved for issuing material that's in direct support of weapons systems, where the documentation might lag just a little bit behind the physical issue.
Which sounds risky.
It can be. The preferred modern method, though, is mechanized processing, which minimizes the risk that's inherent in post-posting.
Okay, let's dig into that. What's the key advantage of mechanized processing for ashore commands?
Speed and immediate auditability. It's that simple. Automated systems transfer data and send requisitions electronically, and they validate the data instantly.
So it catches errors on the spot.
The cause and effect is simple. The computer system ensures compliance with all mandatory entries, and it flags errors immediately. If you leave out the project code or the unit of issue, the system just rejects it.
So it prevents an incomplete or erroneous requisition from ever entering the system.
Right. It's a built-in error reduction mechanism.
That sounds like the ideal low-risk scenario. Now, let's contrast that with operations afloat. When ships are underway, maybe in a high-tempo or bandwidth-limited environment, they often have to rely on offline processing.
They do.
What are the practical constraints that force this more manual method?
The term offline really just describes the system where customers on board ships, maybe using a system like RSUP, PLY, submit a requisition that requires manual entry by the supply department later on.
So there's a delay.
There's a delay, and the constraint is often environmental. You have limited connectivity, strict security protocols, or simply the time it takes to interface with the central computer systems while you're also managing a physical inventory.
So the initial documentation is handwritten or manually keyed in.
It is, and that introduces a significantly higher margin for error compared to the instant validation they have ashore.
And here is where policy and audit risk really meet.
Absolutely.
If the supply department is manually keying in transactions, that original requisition form has to be perfect.
Perfect.
For anyone prepping for an exam or designing a logistics software solution, our sources list 11 critical data points that are required for offline processing. Let's hit the most crucial ones.
For sure. If these 11 elements aren't right, the whole transaction just halts. Or worse, it corrupts the financial record.
Well,
So the requisition must contain, at a minimum,
let's list them out.
1, the NSN on ICN or part number. Without this, you don't even know what the item is.
Okay.
2, the unit of issue and the quantity. Basic physical tracking.
Makes sense.
3, the document number. That MILSTRIP ID ties it to the history of the request.
Right.
4, the chargeable end-use fund code. This is critical. It identifies who pays for it.
Who's on the hook?
And 5, the project code, which identifies why it was needed. Then you have a priority, advice code, MDS data.
Okay, that's an overwhelming amount of detail. Let's focus on 3 elements that are most likely to cause a cascading failure if they're missed in that manual offline environment.
Good idea.
I'm thinking the document number, the chargeable fund code, and the priority. Why are these the unholy trinity of offline failures?
That's a great way to put it. Okay, if the document number is incorrect or duplicated, the system can't reconcile the expenditure against the original demand.
Which leads to
Inventory discrepancies that might require a formal survey later on. It creates a mess.
okay, what about the fund code?
If the chargeable end-use fund code is incorrect, the entire financial accountability for that material, whether it's NSA or APA, is misplaced. You could potentially bankrupt the wrong department's budget, or, worse, mask your true consumption rates.
And finally, priority.
If the priority is wrong, the material gets processed too slowly, which can literally halt maintenance and directly impact mission readiness.
Can you give an example?
Sure. An incorrect priority 1 could be delayed by 23 hours if it's accidentally entered as a priority 9. That's a grounded aircraft.
That puts the manual keen responsibility for supply personnel afloat into really sharp relief.
It does. They have to process those offline requisitions into the automated system as fast as possible, or use the post backfit option, which is essentially just playing catch-up with the records.
And the preference is always for timely processing to ensure real-time inventory accuracy.
Always. The contrast between a shore with its instant computer validation and a float with its manual keying and risk really highlights why compliance with those 11 points is so critical for shipboard logistics.
That's a great summary of the challenges. We've established that the complexity really stems from whether you have immediate mechanized validation or you have to rely on accurate paper documentation that's just waiting for manual processing. All right, let's move from what documents are needed to what I think is the most intense section for mission readiness. How quickly supply activities must act. This is the requisition handling precedence.
This system is where bureaucracy directly impacts warfighting. It's not an exaggeration.
Explain that.
Handling precedence dictates the speed of the entire logistics process, and it's based on the priority designator, or PD, assigned to the activity making the requisition. It ensures that finite supply resources are always allocated based on the criticality of the mission.
And the system breaks requisitions into 3 issue groups. Let's start with the most urgent one.
Okay, issue group 1. This group contains material requests bearing priority designators 01 through 03.
The highest priority.
The highest. These are often immediate mission essential requirements. These requests require the fastest possible handling and processing from the moment they're received right through to delivery.
These are the items where the customer might literally send someone to run down and pick it up.
That's what we call a bearer pickup. And yes, they'll send a bearer directly to the supply response section, the SRS, to grab it immediately.
Okay, what falls into the middle group?
That's issue group 2. This covers PDs 04 through 08. These are essential but not mission critical right now.
Still important, but not a crisis.
Exactly. These items require identification and marking before they're put into storage to make sure they're organized and traceable, but they typically do not require the customer to rush down for a bearer pickup.
The mission won't fail in the next hour without them.
That's a good way to think about it.
And group 3.
Issue group 3 encompasses PDs 09 through 15. These are generally your lower cost items, common consumables, or things that support future planned maintenance.
The routine stuff.
The routine stuff. They require no special identification or marking before storage. They are vital for long-term sustainment, but they are not driving immediate tactical decisions.
That triage system is fascinating, but the most actionable critical knowledge for you, the policy planner or exam taker, is the processing standards table.
Yes, these are hard numbers.
These numbers define the mandatory maximum time allowed for the supply activity to fulfill that requisition. And this directly ties into the Naval Aviation Maintenance Program, or NOMP, standards for squadrons and maintenance organizations. So what are these non-negotiable standards?
There are 3 time standards, and they are the backbone of rapid logistics support. For priority group 1, that's priorities 1 through 3, the processing time is 1 hour.
1 hour.
1 hour. For group 2, priorities 4 through 8, it's 2 hours.
Okay.
And for group 3, priorities 9 through 15, it's 24 hours.
1 hour. That is absolutely relentless. If I'm running the supply response section on a carrier, the moment that priority 1 requisition drops, I have 60 minutes to find it, document it, and get it into the customer's hand.
You do.
What kind of internal pressure does that 1-hour standard place on staffing and the physical layout of the storeroom?
It forces hyper-efficiency. It mandates that critical items must be staged in easily accessible, perhaps even decentralized locations, just to minimize transit time.
So you're not running to the back of the ship.
Exactly. The 1-hour clock means the physical finding and processing of the item, not just the data entry, has to happen almost instantly. This is why group buy items so often involve that bearer pickup we mentioned. It essentially skips the delivery queue.
For priority 1 through 3, logistics has become a tactical function.
It absolutely has.
And conversely, that 24-hour window for priority 915 seems luxurious. But it's just as important because it ensures that those lower priority requests don't clog up the system and halt the flow of essential materials.
Precisely. The entire structure is designed to meet mission readiness requirements.
And while that clock is running, the customer needs to know what's going on.
Yes, and this brings up the definition of requisition status. This is the formal communication mechanism that indicates the action currently being taken by the supply activity.
Why is providing that status so important if the clock is already ticking?
Because it manages expectations, and it allows the customer, the maintenance crew, to adjust their plans.
So they can react.
Right. If the status is in process, they wait. But if the status changes to suspense or not in stock, NIS, they know they need to start planning for an alternative course of action, whether that's cannibalizing a part from another platform or contacting a different source of supply.
You mentioned suspense processing. In that ideal mechanized environment, if an error is flagged, what exactly causes a request to enter suspense?
Suspense occurs when the automated system identifies an issue that requires a human to step in. It needs technical editing or special managerial approval.
Like what?
Maybe the fund code that was cited doesn't match the activity's record, or the quantity requested exceeds a certain financial threshold. The system holds the request. It pauses it until a human intervention resolves the issue.
And once that validation is complete, the goal is always a complete issue.
Always.
Which, just to reiterate for clarity, means the issuance of the full, complete quantity requested by the customer, with no substitutions, no back orders, right?
That's the benchmark of success in the system, a complete issue.
So to summarize this numerical section,
Yeah.
This is all about time. Priorities 1-3, Group 1 get 1 hour, 4-8, Group 2 get 2 hours, and 9-15, Group 3 get 24 hours. This mandatory structure dictates operational pace and resource allocation for the entire logistics chain. It's a crucial context point for readiness reporting.
We've tracked the issue from request to picking based on priority. Now we have to document the physical handoff.
The completion.
This is the transaction completion, and it serves as the proof of delivery and the expense validation.
And the primary document that acts as that proof of delivery is the DD Form 1348-1.
Correct. This is a multi-purpose form that documents the issue, transfer, or receipt of material. When supply personnel are preparing it for pickup, they have to use the first destination address section of the document to clearly mark the staging area location, the name of the person preparing it, and the date.
That ensures the chain of custody.
It does. And the audit trail is enforced by a very simple rule: the 2-copy requirement.
Right. Tell us about that.
The transaction requires 2 copies of that issue document. 1 copy, ideally unsigned at that point, goes to the customer. That's their record of the material they requested.
And the second copy?
The second copy is the one that is signed by the customer upon physical receipt, and that serves as the definitive proof of delivery. This signed copy is retained by supply to update the stock control records and validate the expenditure transaction.
And if you lose that signed copy?
If you lose that signed copy, you've lost the proof of the expense. It's a huge deal.
For those offline transactions we discussed, the ones often handled by the Supply Logistics Support Center, SLSC, or the Supply Response Section, SRS, the process moves manually through a mandatory 4-step flow.
It does.
Let's detail what happens in each of those 4 steps.
This flow ensures internal checks and balances. Step 1 is pre-posting processing.
Okay.
This is the initial review where the SLSC checks the requisition for completeness and correctness. They verify the material is in stock and locate its storage point, often using the master stock status and locator listing, the MSSLL.
Step 2.
Step 2 is warehouse processing. This is where the physical labor begins. The material is located or picked, it's prepared, so packaged.
The handoff.
Step 3, material turnover. This is the critical handoff. The material is physically delivered to the customer, who then signs and dates the issue document, formally accepting custody and completing the delivery.
And the final step to close it out.
Step 4, post-processing. Supply personnel take that signed copy and use it to update the inventory records in the automated computer system, officially finalizing the expenditure transaction in the books.
I can see the risk now. If that post-processing is delayed for any reason, the inventory system shows material on hand that has actually physically already been issued.
Exactly, and that causes discrepancies. The integrity of the entire inventory record relies on the speed of that post phase.
Now, let's dive into what seems like the most complicated part of documentation. The 4 specific ways an issue can be recorded on that DD Form 1348-1, because it's rarely a simple complete issue.
That's very true.
Let's start with the easiest one, a complete issue.
If the issue is complete, it's straightforward. You simply circle the quantity issued, you sign it, you mark the staging location, and you attach a copy of the document to the material. It's clean, simple, and the preferred outcome.
Okay, next up, the standard pack adjustment.
This happens when the requested quantity doesn't match the quantity in the fixed packaging, the standard pack size.
For example,
Let's say the customer requested 5 resistors, but they only come in a standard pack of 10. You have to adjust the issued quantity to 10, circle it, and crucially, you have to mark the document with the notation standard pack adjustment.
and that's vital for audit purposes, to justify why the numbers don't match the original request.
Exactly. It explains the discrepancy.
Now, the most challenging documentation seems to occur with a partial issue. The full quantity is not in stock and IS, and there's no substitute available.
This requires maximum attention to detail. First, you line out the original requested quantity, then you enter and circle the smaller issued quantity.
And then you have to talk to the customer.
You must then inform the customer of the partial status and determine what to do about the remaining requirement. The documentation rule here is that you have to mark the issue document with one of 3 very specific phrases:
What are they?
partial issue, balance required, or balance canceled.
What are the audit implications of marking it balance required versus balance canceled? That sounds like a huge decision.
The distinction is critical. If you mark it balance required, the remaining quantity goes into a formal backorder status. The supply department is still obligated to fill that demand when the stock arrives.
And if it's canceled.
If you mark it balance canceled, the supply obligation for the remaining material is extinguished. It's over. The customer has to submit an entirely new requisition later if they still need it. This decision fundamentally impacts future inventory management and demand forecasts.
And internally, if the material is not in stock or not carried in C, that shortfall still has to be tracked, right?
Yes. The supply activity uses specific forms for this. The NMSUP 1251 NIS is for items that are normally stocked but are currently out, and the NAVSUP 1251 NC is for items that are not on the inventory listing at all, but for which there is still a customer demand.
Okay, finally, the substitute issue. The requested item is NIS or NC, but an acceptable substitute is available. This sounds like a documentation nightmare.
It definitely complicates the paper trail. A substitute issue typically requires 2 separate issue documents.
2. Why 2?
The original document is used to process a partial issue or even a zero quantity issue against the original NSN. This records that the initial request wasn't fully met.
Okay.
Then a second issue document is prepared to process the substitute item with the substitute stock number and quantity cited. The SLSC is responsible for making sure both documents are linked to that initial demand.
So that 2-document method ensures both the original demand signal and the consumption of the substitute asset are correctly captured in the system.
That's the only way to do it right.
Okay, to quickly summarize Section 4. The DD Form 1348-1 is your audit proof. Manual processing follows those 4 rigid steps: pre-post, warehouse, turnover, and post-post. And for documentation, the critical policy point is determining whether a partial issue results in a balance required, which creates a back order, or balance canceled, which means the customer has to start over.
All right, moving into some more complex transactions, we encounter special issue procedures. These require unique accounting or control rules, usually based on the high value or the nature of the asset itself.
Let's start with a high-value personal item, flight clothing.
Flight clothing and any specialized flight operational equipment are considered highly controlled assets.
The supply department holds on to them.
Exactly. Supply retains physical custody and manages the pools of equipment. The issuance is very tightly regulated. If an item is lost or missing, it automatically triggers a formal survey and investigation.
Documented on a DD Form 1348.
right, to determine the cause. And replacement is not automatic. It requires a NSUP 1251 request and approved authority, which just demonstrates the high degree of control over this type of government property.
Okay, the second specialized issue is the Maintenance Support Package, or MSP. This bundles items needed for specific maintenance actions. Why does this require such extensive documentation?
Because MSPs are designed to feed the 3M system directly and accurately.
Ah, that link again.
Right. Whether it's processed offline or mechanized, the issue drop sheet has to include a really comprehensive set of data points, far beyond the standard 11 we talked about earlier.
What else does it need?
It needs the NSN, UICN, LICN, Julian date, serial number, the job control number, JCN, type equipment code, work unit code, project code, priority, receipt signature, and the fund code.
That JCN linkage is the key, isn't it?
It is the ultimate link. By connecting the JCN to all of that financial and material data, higher-level analysts can determine with precision the material costs associated with maintaining a specific piece of equipment over its entire lifespan.
It gives management the granular data they need for life cycle cost analysis.
That's what it's all for.
Then there's the shipboard convenience model, CMART.
CMART is basically a self-service store. It handles high turnover, low-cost consumables, basic repair parts, and equipage that are used for immediate stock replenishment, or what's called direct turnover, DTO.
And the paperwork is simpler.
Much simpler. The transactions are typically requested on a Navi SOP form 1314 or just an authorized local shopping list. The advantage is decentralization and rapid access.
And the trade-off.
The trade-off is slightly less centralized audit control over those small, frequent expenditures.
And finally, a highly specific, high-visibility financial issue. Aviation fuels.
Aviation fuels transactions are, as you'd expect, meticulously documented on the DD Form 1348-1. The critical accounting nuance here is that the transaction results in the issue of SAC 207 NSA material.
What does SA 207 mean?
SAC 207 Stock Account Code 207 specifically designates the financial inventory report entry as issues with reimbursement service use. This is a very sensitive budgetary line item that's tied to major defense accounting and requires exact compliance.
Now, let's pivot to material transfers, which, unlike issues, change custody between activities rather than providing material to an end user.
Right, a key distinction.
And authority is key here.
It is. Transfers are heavily regulated. They must only occur after receipt of an approved official request document. If excess material is being transferred from a ship to a share activity, the supply officer's signature and approval are mandatory.
Reinforcing local accountability before releasing government property.
You have to have that check.
Let's focus on the financial reality of transfers involving Navy stock account NSA material. The decision of whether a transfer is chargeable or non-chargeable hinges entirely on the type commander, the TICOM. This seems like a critical financial detail.
This is a major insight for anyone preparing a budget memo. Transfers of NSA material between ships that report to the same type commander, for example, both are under Comnaverlant, are considered non-chargeable transactions.
So no money changes hands, essentially.
Right. They shift the asset, but the losing ship's OPTAR is not financially impacted.
But if I transfer that same exact item to a ship that reports to a different type commander,
that immediately makes the transaction chargeable. The transfer involves a formal reduction of the material value in the supply officer's records. It's effectively a sale, and the losing ship's OPTAR is reduced.
And why is that system in place?
This mechanism ensures that different high-level budget owners, the TICOMs, have to account for assets they acquire from external commands. It keeps the book straight at a higher level.
And for APA material?
For APA material, since it was non-chargeable to begin with, it remains non-chargeable regardless of the TICOM involved. It requires no summarization.
That explains the financial rigor. Transfers are basically internal billing mechanisms designed to hold budgetary owners accountable when they pull assets from outside their direct resource pool.
That's a perfect way to describe it. And finally, for documentation, while the DD Form 1348 or 1348, what is used to document the physical movement, the DD Form 1149 is frequently used as the controlling document to officially document the transaction when transferring material to another activity. It serves as the official record of that change in custody.
Okay, to summarize this advanced section, we covered special issues requiring intense data, like the MSP or strict control, like flight clothing and SC-207 for fuel. And most critically, we understood that the financial burden of an NSA material transfer is determined by whether the gaining and losing activities report to the same or different type commanders.
We must now address the material that's flowing back into the supply system, the reverse flow. This begins with material turned into store-shore or turn-ins. This is generally stuff that's broken, unneeded, or salvage.
And for excess material being turned into a shore activity, approval is usually required from the TICOM operating budget manager.
Right, to ensure the turn-in aligns with the overall command strategy for assets.
And there's a key accounting detail here for anyone thinking about policy.
There is. Turn-ins of material to store-shore that were not stock-funded like specific non-stock-funded ship's OPTAR material are explicitly not recorded in the ship's OPTAR log as a credit.
Why is that rule in place? It seems counterintuitive.
It's to prevent accounting manipulation.
How so?
Think about it. If a ship bought something that didn't use stock funds and then returned it, crediting their OPTAR would create an artificial budget surplus. Since the ship's budget wasn't hit by the purchase price in the first place, it can't be credited upon its return.
That makes sense. Okay, the highest priority turn-in is for MTR items, the mandatory turn-in reparables. You mentioned they have their own document number sequence. What is the fundamental mission of the MTR system?
MTR items, which are listed on the Material Repairable Item List, MRL, and the Fleet Ballistic Missile Material Repairable List, FBM-MRL, are high-value assets designated for mandatory return to the supply system.
And the mission is?
The mission is cost avoidance, pure and simple. By compelling the return of repairable carcasses, the Navy maintains a healthy pool of assets, avoids billions in unnecessary new purchases, and maximizes its resource utilization.
And the GD Form 1348-1 is used for the physical documentation of that turn-in to store ashore, the MTIS.
That's right.
Now, let's move to the most serious aspect of this reverse flow, surveys. This is for accounting for loss, damage, or destruction of government property. The formal document here is the DD Form 200, Financial Liability Investigation of Property Loss.
The purpose of the survey is multifaceted. It's to determine the precise cause of the loss, gain, or damage, and to formally adjust the stock records.
And when do you have to start one?
A survey must be initiated when there is any indication of criminal action or gross negligence, or when discrepancies between your inventory records and your physical stock status can't be resolved through standard inventory adjustments.
So when does a normal inventory discrepancy, a simple miscount, transition into a formal investigation requiring a DD Form 200?
If your preliminary research fails to resolve a discrepancy that involves either a significant extended dollar value or a particularly sensitive item, the D Form 200 becomes mandatory.
And this ensures formal accountability.
Right, and it prevents processing errors from continuing to snowball down the line.
Here's the most critical numerical threshold for policy review and exam preparation. The criteria for waiving the DD Form 200. When is a formal investigation not required?
Okay, the general rule is that you need the DD Form 200. However, it can be waived if the commanding officer believes that negligence is not indicated and one of the following criteria is met.
What are they?
First, there is no death or personal injury involved. Second, the total property damage does not exceed $2,500. And third, there is no possible claim against the government.
That $2,500 limit is the administrative dividing line.
It is.
So if I lose a $5,000 piece of equipment, even if the CO doesn't suspect any malice, a formal DD Form 200 investigation is still required solely based on the monetary value.
That's right.
But if I lose a wrench set that's valued at $2,000, the CO can handle it administratively, is that correct?
Exactly. That $2,500 threshold is the line between a local administrative adjustment and triggering a formal financial liability investigation process that involves external reporting.
So it provides necessary latitude for day-to-day minor loss management while ensuring high-value losses are always formally scrutinized.
That's its purpose.
Once that DD Form 200 is completed, its distribution is highly specific to make sure all the legal and financial offices are aware.
The paperwork path is crucial. The original copy is retained by the activity that initiated the survey. This is their official record of the investigation. The duplicate copy is returned to the proper property officer, essentially replacing a preliminary copy they might have.
And the third copy, the triplicate.
The triplicate copy's fate is based on liability. It's destroyed if no financial liability is involved. But if financial liability is assessed against an individual, for gross negligence, for instance, that triplicate copy must be sent to the disbursing officer to initiate collection proceedings.
That link to the disbursing officer through the triplicate copy is a perfect illustration of how logistics documentation directly translates into personnel accountability.
It connects the survey process directly to the possibility of financial recoupment for the government.
Okay, to summarize this final section, Reverse flow is governed by MTR rules for repairables and accounting constraints for non-stock funded items. The most serious accountability measure is the survey process, formalized by the DD Form 200. And the key administrative threshold for an investigation waiver is property damage not exceeding $2,500, provided there is no indication of negligence. We have now mapped the entire life cycle of material expenditures. We've navigated complex procedural rules, mandatory definitions, and critical financial thresholds.
That's a lot to cover.
It is. We moved from the initial issue where Priority Group I demands an almost instantaneous one-hour response through specialized documentation requirements like the extensive data points needed for the maintenance support package.
Right up to the formal accounting of loss and liability via the DD Form 200.
The central takeaway for you, whether you are managing a division or writing policy, is that accountability is non-negotiable, and it is built entirely on precision.
It has to be. The financial impact to a command, that OPTAR liability, hinges entirely on the type of expenditure issue versus transfer, and the material source, NSA versus APA.
And in the high-stakes world of naval logistics, the most common point of failure is inaccurate or incomplete documentation.
Especially in that offline environment we talked about, which can halt maintenance and completely undermine financial readiness metrics.
It's easy to focus on the bureaucracy, but the numbers really do prove that this system is engineered for speed when it's necessary. That one-hour mandate for critical spares is perhaps the most defining feature of tactical logistics.
Which brings us to a final provocative thought for you to carry forward.
Okay, let's hear it.
If the ultimate goal of all this material expenditure tracking, the DD forms, the mill strip numbers, the $2,500 thresholds, is not merely financial accountability, but ensuring mission readiness, how does that mandatory one-hour processing time for Priority 1-3 requisitions fundamentally shape tactical and operational planning on board a ship?
That's a great question.
Does the institutional trust in that one-hour turnaround enable commanders to take greater tactical risks, knowing the essential spare part will arrive immediately compared to the calculated risk required by the 24-hour window for lower priorities?
It forces operational planners to treat logistics support as a real-time tactical asset.
Not a slow administrative function. That's your next level of analysis.
Food for thought indeed. Thank you for joining us for this deep dive into naval logistics accountability. We'll see you next time.